With escalating tensions in the Middle East and the possibility of the Israel-Hamas war spilling over, gold breached the $2,000 an ounce level on Friday. Now, overall, the precious metal has gained more than $160 since October 7th. That's the day when Hamas terrorists invaded Israel and killed more than 1,400 people, mostly civilians, and took 200 hostages into Gaza. It's now almost 2 weeks since that attack, and Israel is expected to launch a retaliation ground operation into Gaza, a move which is likely to ignite conflicts on other fronts. Earlier Friday, gold breached that $2,000 an ounce level and has been trading near 2.5-month highs. Gold also hit record highs in other currencies, including the Japanese yen, the Chinese yuan, and the Australian dollar. Well, joining me now to discuss what the safe haven asset is signaling and what we can expect is Gary Wagner, editor at thegoldforecast.com and a top commentary contributor on Kitco News. Thanks for joining us, Gary.
It is my pleasure to be here. Thanks for having me.
All right, Gary, a lot to discuss. Let's start off with this move from gold. Obviously, we've got tremendous geopolitical tensions, but we also heard from Fed Chair Jerome Powell earlier this week. So big picture, what is driving gold? Is it geopolitics? Is it the Fed? Or is it both?
I believe it's a perfect storm. It is a combination of multiple factors. The Federal Reserve was pressuring gold lower as they raised rates. There have been recent comments that they could either have concluded that rate hike cycle at this point, or they're not going to raise rates again this year. That was construed as extremely bullish by market participants. Of course, the geopolitical tension that you just mentioned was the large ignition, so to speak, of a second stage. And that stage has taken gold to a high today, I believe right around $2,009. We haven't seen that in a while, but it is the tact and the speed that gold has ascended to higher values that is most amazing.
Right, and I'm going to break down the Fed in detail, but I do want to focus more on the geopolitical angle right now. And Gary, this is what gold is supposed to do. Gold is supposed to be a safe haven. So do you see gold staying above this key level now? Because it doesn't seem that things are going to get any calmer anytime soon on the geopolitical front. On the contrary, more likely will get worse, which I'll elaborate on. But safe to say that this is a support level at this point?
I think it's very safe to say that we are right around the support level. My sense is that we will at some point, maybe even by the end of the year, actually hit an all-time record high, a price we've never seen before. I think the fact that we rose so quickly above 2,000 marks that as a level of support rather than resistance anymore. That's a major change and a huge move in gold.
Right. I mean, you could argue that gold at 2,000 is suggesting that it doesn't see this conflict really getting out of hand, that it's kind of suggesting that the market is expecting containment to the region.
That's quite possible. The answer is there's so much uncertainty involved that my sense is it is going to be contingent on whether or not other Arab countries or Hezbollah, for example, in Lebanon, enter the fray. Because if that happens, it will be a terrible scenario and gold would move much higher, not for the reasons we want to see it move higher, but it would absolutely be a impetus for gold trading to a new contract high. And that's the fear. That is the big fear.
Gold moving higher on these kind of developments is certainly not a good thing. So let's focus more on the geopolitical angle because we're going into a very uncertain weekend. We're already seeing small signs of spillover, Gary. The Pentagon said that U.S. Navy warships have recently intercepted 3 cruise missiles and several drones launched by the Iran-backed Houthi movement from Yemen. So those were reportedly headed at Israel. The U.S. Navy intercepted them. U.S. military also saying that it intercepted multiple aerial drones targeting U.S. troops stationed in Iraq earlier this week. So Pentagon is saying that U.S. officials are on heightened alert for potential attacks on American forces. We do have 2 U.S. aircraft carriers in the Mediterranean. A spillover is quite probable. We're not hoping for it for sure, but it's quite probable. And then we've got the situation on the ground, and that has been escalating. We've got Israel preparing a ground assault on Gaza to rescue the hostages. They say their aim is to destroy the terrorist group Hamas. We do have 2 American women hostages released today by Hamas. That was a Qatar brokered arrangement, but there's still at least 200 hostages in there, women and children. And it's going to be an ugly battle. There's no way this is going to be pretty. Hamas, we know, uses civilians as human shields. We know that they have terror tunnels underground. And military analysts are saying that Hamas were expecting Israel to go in. You don't take 200 hostages and don't expect the IDF to come in and rescue them. So likely the area is very heavily booby-trapped. Some military analysts are actually expecting a drone attack on the IDF once they go into Gaza. Drones possibly supplied by Iran. We don't know that. We don't know a lot, but we do know that if this ground operation happens, it's going to be quite grueling. And to your point about other players getting involved, Iran has warned that if Israel goes in, it will unleash its other terrorist proxies, Hezbollah. Hezbollah already firing several rockets into Israel's north. Some towns close to the northern border have been evacuated. Gary, if this ground operation begins, when we hear Israel has gone into Gaza, what kind of reaction do you expect from Gold?
Well, the first comment that I want to make is the factions such as Hamas and Hezbollah were counting on the Americans entering. This was their plan from the get-go because they want the conflict to grow. They want more countries to be involved. They want to have as much of a dramatic effect as they can. And by bringing in U.S. aircraft carriers and the presence of the U.S., which, of course, Iran is on record saying death to Israel, death to America, this is exactly what they wanted to accomplish. That is why they took the hostages, in my opinion, was to elevate this to a level that would put them really on the global front in terms of the news cycle. And we've played right into their hand. The issue is there's no way not to play into that hand because our number one goal in America is to get the hostages back. As far as Israel goes, they say that what they want to do more than anything is make sure it never happens again. And I wish that they would have done more concerted strikes, surgical strikes, such as we saw the way America took out bin Laden. Quiet, stealth, a few people in there. And it wasn't an incursion in which they literally leveled the city, because Gaza is a very, very small territory. And so when you ask people to move north, you've got 2 million people in a very tight spot. Where are they going to move? And it is a quagmire to be able to resolve this peacefully when one side doesn't want to negotiate, which is Hamas, unless we meet unrealistic expectations and their demands. So we have seen a trap set and effectively locked. In other words, that trap itself has now been set off. The worst thing that could happen is an escalation with lots of troops. If they want to make it so that Israel is safe and they don't have to worry about Hamas repeating this, it has to be surgical. It has to be in such a way where the casualties of innocents, civilians, children, just regular people are not a great component of this. There's always going to be some damage, but it has to be contained for the image of the Western world. And that's exactly what the other faction is trying to avoid. They want America and Israel to come off as being absolutely brutal. And there's no doubt war is brutal, killing is brutal, but I believe there's a different attitude. But it's much more complicated than that. But my sense, to answer your question directly, is we are playing right into what they wanted to accomplish, which is to spread this conflict to a global arena rather than a regional conflict.
Right. Well, my question was more focused on gold and price reactions there. But seeing as we have gone into more analysis on the region, Gary, just to point out a couple of things, and that is Hamas does not want to negotiate peace. That's clearly in their charter when they say that they want the annihilation of the entire state of Israel, killing every single Jew. So peace with Hamas and Iran is out of the question. The Palestinian Authority has been willing to negotiate peace, but several peace deals have been made, not yielding any results. So unfortunately, this is not going to have any near-term or even long-term peaceful resolution. I hear your point about potentially playing into their hands. So far, the U.S. has not actually gotten involved. The IDF has said it actually does not want the U.S. military involved directly because of fear that this would escalate things dramatically. And yes, terrible loss of civilians on both sides. The IDF is aiming to minimize civilian casualties. Hamas, unfortunately, preventing people from leaving, using them as human shields. And to your point, Gaza is a very small area and very difficult to have these pinpoint strikes, especially when Hamas uses schools and hospitals to store its munitions. So it is really, in a way, a terrible setup, a terrible situation for the Palestinians in Gaza and a terrible situation for the people in Israel. My question, though, not to sound callous and not to sound cold about all of these dynamics, but our focus here is on the economy and on gold in this particular interview. What is the trigger for gold? If we hear that there is an IDF ground operation, if we hear that that has begun, do you expect a price reaction from gold on that news?
I think that's stage two. I think we've seen the trigger. The trigger took gold up above 2,000 briefly today. That's already in place.
So if we hear the IDF has gone in, that's already priced into gold at 2,000. You don't see gold popping up on that.
It hasn't been able to sustain it. But if the longer it goes on without any kind of ceasefire talk, negotiations, any end game that involves some sort of peaceful resolution, gold has nowhere to go but up. Nowhere to go but up. And I think that the fact that gold has risen is only the beginning of what we will see 2 months, 3 months from now. I think we'll be talking about a quite different story, looking at $2,100, $2,200 an ounce gold.
Yeah, again, not a story that anyone really wants. But what is gold at 2,000 telling us? I mean, to me, it's, like I said earlier, it's signaling that it doesn't actually see a spillover. Nouriel Roubini, Dr. Doom, the economics professor there, he is saying that the market is looking at a baseline view at the moment, that that's what's being priced in by the markets, and that a tail risk of real escalation is not being priced in. And he says that's a very real possibility that this thing could really spiral, saying that Iran, to your point, is likely to unleash Hezbollah when Israel goes in to prevent Israel from trying to destroy Hamas. Then, and I'm quoting him here, Israel, US have to attack Iran. That's unleashing its terrorist proxies and is also accelerating its plan to build a nuclear bomb. Global stagflation follows as oil flow from the Gulf is blocked. Then China is tempted to block Taiwan as the US is already bogged down in wars on two fronts. We've got Russia, Ukraine, and the Middle East. And then World War III if the US tries to break the Taiwan blockade. That is a scenario painted by Nouriel Roubini. Other people have said that it's not unlikely that things spiral into that. Gold is definitely not pricing that in at the moment.
Not fully pricing it in, absolutely correct. And it's an excellent point that you bring up. And that is escalation is almost a certainty, And if that does come to pass, gold is going to react in a much more volatile way, moving higher to the upside with larger gains. The one thing that I would like to kind of interject is when we look at components of a portfolio, where do you want the bulk of your portfolio during times when you require safety? Is it equities? Is it the dollar? gold seems to stand out head and shoulders above the other asset classes. And so you're seeing a lot of professional traders, hedge fund managers, individual speculators working with gold in ways they haven't done in years. Gold was not a sexy metal, so to speak. It didn't have the shine that it has right now. As we've said, it's a terrible reason for that shine, but facts are facts. Gold has come into its own recently and most likely will continue to grow in terms of interest and acceptability, and larger percentages of portfolio by major players will continue to grow.
All right. To your point again, JP Morgan has advised investors to allocate more to gold. The top strategist there telling investors to buy more gold and remain underweight in stocks. He says most of the negative effects from high rates are still to come, including more delinquencies in consumer loans and corporate bankruptcies. And of course, there's still this geopolitical situation, which is something that the Fed is also taking into account. We did hear from Fed Chair Jerome Powell. He was asked about this. He was saying, our institutional role at the Federal Reserve is to monitor these developments for their economic implications, which remain highly uncertain. Speaking for myself, I found the attack on Israel horrifying, as is the prospect for more loss of innocent lives. So with the macroeconomic picture where we are, does the conflict in itself curb the Fed's ability to raise rates, do you think?
I think that's a great question. I don't believe that the Federal Reserve has the tools or the wherewithal to really have any kind of major impact on the geopolitical crisis that is currently at play. Their dual mandate is maximum employment and keeping inflation below a certain target. The fact of the matter is they cannot be as aggressive as they want to be because of the fear of what that will do to the economy during a time of absolute geopolitical chaos.
Yeah.
And so they can't do what they want to do. I personally think that they will pause longer than they would have. They might even implement a rate cut earlier than projected in the last dot plot. Realize the last dot plot went from the belief on the June dot plot that there would be 4.25% rate cuts next year, totaling 1%. They amended that to having 2 rate cuts of 0.25%. What that means is if they do follow that game plan, real interest rates are going to be above 5% for the entire year of 2024. And that doesn't bode well for any kind of economic growth. So their hands are tied to actually solve the issues that they're put in position to solve, which is to bring down inflation and maximum employment. And so are hindered greatly by what is going on in terms of the geopolitical conflicts.
It's very hard to raise rates in increased uncertainty with all those factors in place. So given that, what do you expect from the Fed?
I think they'll be much more dovish than they had perceived before. I think they realize that if they maintain their current course and the course they wanted to be on, they're going to cause more harm than good. They're not looking to do that. And I think that they're going to back off. I think that they're going to implement a longer pause. They are going to postpone doing any major retooling of how they're working with inflation and the things that their mandate states they should until they see some sort of resolution pathway, so to speak. And so it's going to greatly hinder the ability of the Fed to do what they're trying to do and what they've set out to do.
Do you see a cut in by the end of the year?
If you asked me before October 9th, I would have said no. I believe yes. They have to. They have to be more.
You think we'll get a cut before in the next? Well, not in this meeting, but possibly in the December meeting.
A cut? No. In December, you mean? I'm
Yeah. Do you
hoping
see the
that
Fed not just pausing, but pivoting and cutting?
I would be surprised, but in this geopolitical climate, it wouldn't be out of line for them to do. But I think it's unlikely. But the question is, we don't control what the Fed thinks. I think it would be a bold move and it would work against them.
Okay.
That's my sense.
All right. Well, we've also got to bring oil into this equation because, as you said, the Fed is trying to bring inflation down. Jerome Powell saying that they're still committed to 2% inflation. Oil not going to help necessarily. Market observers expect that at the very least, the U.S. will toughen its sanctions on exports of oil from Iran. So not sure how OPEC responds to this. So that's one minor issue. If that happens, what does that mean for inflation and for the Fed? And before I get into the nightmare scenario of what could happen to oil prices here.
In terms of oil, realize the issue began when Russia attacked Ukraine. They're such a large producer of oil, and that set the wheels in motion. I believe that the cartel itself will use this to their advantage. I think that oil prices are going to go higher. When we look at recent inflation data, it's actually housing that has been inflating the greatest amount, oil coming in second. So oil is a persistent problem. It is controlled by only a few countries. And the fact of the matter is, it began with Russia. And here's my final thought on that. When have we ever seen sanctions actually work, accomplish your goals, and bring the price of oil down?
Yeah, well, that's a good point, Gary. The bigger concern, though, is that Iran could get involved and somehow block the Strait of Hormuz. And the Strait of Hormuz in the Gulf, that's responsible for the transit of more than 20% of the oil consumed globally and a third of the world's seaborne gas shipments. So this is a vital energy pathway for the global markets. If Iran blocks this route, this would have major implications for the world, certainly for Europe's supply of gas from Qatar, for, as we said, 20% of the world's oil. Now, analysts are not expecting that it would necessarily block the Strait of Hormuz, but what could definitely happen, or more likely happen rather, is that conflict in the area would be enough to create concern that it's not a safe passage. A lot of oil analysts are expecting oil at $140. So with the Fed fighting inflation, if we do see conflict there and oil spiking to $140, break down what that scenario looks like for us, and then also bring in the gold equation.
Okay. Well, the first thing that you mentioned was that there would be a blockage of the Straits of Hormuz by Iran. They have tried to do that in limited ways before.
Yeah.
The issue is that would immediately get the major Western powers who are protecting their own interests. America wants to make sure there's oil in our country, and that would magnify a fairly regional geopolitical crisis to a global crisis. So if Iran were to do it, it would be because they wanted the end game to be bring everybody into the fight and really ratchet it up in terms of tension. I don't think they would do it believing that they could have an effect, because America doesn't have two aircraft carriers in the area for no reason. If anything, they're protecting their interest and they're protecting the oil. And so I think Iran is well aware of it. And the only reason they would attempt that was to get that response, to bring in other Western countries into a geopolitical crisis that is limited to a regional area. So
Right.
They would have that purpose. In terms of what it would do, I think 140 is very realistic. Absolutely.
You think that is a realistic target for oil?
I do, if certain things happen. And one of them, as you just said, is countries making it difficult to get the oil out of their production areas and onto the open sea. Absolutely.
So what does $140 oil or even $100 oil, you can take both numbers there, mean for gold? I mean, in the sense that it creates inflation, it impacts the Fed's ability, and there is obviously the relationship between gold and oil. So what would that mean for gold?
It will be a bullish undertone for gold, and gold will become more bullish than it is now based upon that new variable.
140 oil gold means what price? $140 oil rather means what gold price?
2,500, 2,400 per ounce.
All right.
That's my upper end, lower end 21 to 2,200. And we've just broken 2,000. We've been to 21 before. It's not that unrealistic. The fact of the matter is will it get there? And if it does, how long will it stay there? But it is possible if certain things happen.
Right.
It's contingent on future actions.
Yeah. And usually some of that is already priced into gold, but it doesn't seem, as I said, that gold is pricing in the tail risks of the worst case scenario. Something that is probably quite likely as a government shutdown here in the United States, because we do have leadership crisis in the United States. There is no Speaker of the House at the moment. We do know that the budget was only extended last time with a stopgap measure until November 17th. Republicans have dropped Jim Jordan's U.S. House Speaker bid after a third failed vote. There's all this political chaos in Washington, not having a House Speaker, very bitter bipartisan divide between Democrats and Republicans. How likely do you think a government shutdown is come November 17th? And what does that mean for gold?
Well, first of all, I don't believe it's chaos, it's calamity. I think the chasm between the two factions, the Democrats and Republicans, have become so deep and so wide that they can't govern the country. They can't pass laws. They can't implement strategies. It has become, the word I can't use on TV, but a match in which they're trying to outdo the other person. In other words, the stubbornness and the unwillingness to compromise has jeopardized the stability of the U.S. government. And we haven't even talked about the $33 trillion in debt, because I think that is going to be a final variable that, if not effectively dealt with ahead of time, will lead to absolute calamity. And that's my fear. The government is a group of people that have not realized they have to work together. And they're not in it, I don't believe anymore, for the purpose of being a civil servant and helping their constituents. They're in it for themselves. I hate to be so cold about it, but that's what we're seeing. And it is a area that has to stop. We have to find a way where government bodies, Republicans, Democrats, can work together for a common good. That's how it always used to be. Now it is not anything like that. In terms of the stopgap measures, we have been playing kick the can down the road for years. This was the second one in just a recent amount of time. They have never been able to agree on a budget. They've only been able to have an 11th hour meeting that kicks it down for 2 months because they can't figure out what it will take to come to a compromise. And until that's resolved, we are headed in very dangerous waters.
Right. So again, this isn't really being reflected in the price of gold so far. Or do you think that is priced into the price of gold?
I think it is not fully priced in. I think it's priced in to a very, very small extent, because I believe that market participants believe falsely or truly that it will get resolved. When push comes to shove, they'll do a stopgap measure. But here's my question. How many times can you raise the actual budget to accumulate more debt before it becomes past the point where it is a resolvable issue.
Right.
We're 33 trillion is a number I can't wrap my head around, with no end game to balance the books. And that is something that could be exceedingly detrimental to the stability of the United States if they can't get their act together.
Absolutely right, Gary. And it's very problematic that we have this paralysis due to political bipartisanship of such a degree that it's impacting everything across the board. And look, if this conflict escalates, or even in the current state, we know that there's going to be more money printing because President Biden has asked for $100 billion in additional aid to be divided between Israel, some Palestinian humanitarian causes, and Ukraine. So he's asking Congress to authorize more money printing, which, again, is a negative for the country and a positive for gold. Sadly, Gary, all of these things that drive gold up are not things we necessarily want to happen at all, right? These are...
Yes, of course.
It's bad news when gold goes to 3,000, but that is nowhere in your price predictions. Do you have a gold 3,000 price scenario over the next couple of months? Like, what would happen for gold to hit 3,000? What perfect storm of events need to come through for gold to hit 3,000 over the next 3 months or so?
An unthinkable event. That's the kindest way I can put it. I don't see that in the cards if this crisis plays out in a extremely geopolitical sense that we have seen up to this point. If there was use of certain types of weapons, if it escalated to an unimaginable level, I mean, you couldn't buy an ounce of gold. But I pray that's not where we're headed. I think that short term, 2,100, 2,200 new contract price high by the latest first quarter of next year, the earliest by the end of this year.
Okay, we will leave it there. Gary, thank you so much. And yes, we all hope that this gets resolved peacefully and that somehow there is some kind of stability restored. Gary Wagner, appreciate your thoughts. We'll check back in with you again soon.
Thank you so much for having me.
Thank you, Gary. And as always, thank you for watching. From me, Michelle Makori, and the rest of the Kitco team. We'll see you next time.